$100 million in commercial real estate in the next 12 months, folks. That is the plan from Ken McElroy. I want to go through and really understand and share with you what I think Ken's plan is, but more importantly, how you, and frankly, I, can take a little lesson from what Ken has planned, because again, I think the opportunity is coming. First and foremost, I respect folks like Ken and frankly, Grant Cardone for calling their shots and putting it on display for all of us to watch. If you don't remember, Grant Cardone said about 6 months ago that he was going to buy real estate for cash, forget getting loans, the rates were too high, and he has done that recently. Now, Ken is out saying that, hey, we're going to buy $500 million in commercial real estate in 12 months. He is going to upgrade or lower the average use of his building. Right now, his average appears to be in the 80s. He wants to basically exchange or 1031 out of older product into new product. But here's the deal. Ken McElroy is seeing exactly what you and I have been talking about for a while. He is talking about a disruption in lending. He is talking about a disruption in property management. Folks, how many times have I told you over the last year that we had syndicators and operators that were nothing more than financial engineers? They have never run a building. That does not end well. The other thing we talked about in Ken McElroy's video is he talked about being a speedboat versus an ocean liner. What do we mean by that? As we have seen, I think it was Blackstone. Actually, I know it was Blackstone. Blackstone, Jonathan Gray, gosh, when was that? 3 months ago, called the bottom in commercial real estate. Now, Blackstone has the bandwidth, the reputation to be early. Most REITs, most other big investment houses, they're not interested in being early. They don't want to capture the bottom. What they want is the return. And they're saying, hey, we'll miss 5 or 10% off the bottom, but we will come in when the waters are safe. So what Ken McElroy is basically telling all of us is, at least in the assets that he looks at, and again, Ken McElroy is playing in a space I will never play, probably a space where most of you will never play, Class A apartments, big units. But again, we can take the lessons from what Ken is sharing and tweak them to our own buy box. Ken McElroy right now is looking at newer development from builders who need to get out of construction loans. He is looking for other Class A assets that had bridge debt and short terms, things of that nature. Ken McElroy's team is also saying we have yet to see price discovery in Class B assets, as I have shared as well. But here's the deal. I have told you, now Ken has told you, it is coming. The fact that Class B is priced at the same as Class A is not normal. Folks, according to Ken McElroy's video, which you are free to go watch, I'll find the link and probably put it below. He talked about Class A in Phoenix. He said during the peak, which I think he said was February of 21, it was about $300K a door. Now it's 190. Folks, that's a 35-ish% drop. If you bought a building with 35% down, you are now going to lose the building because you'll need to do a cash-in refi. The pain is undoubtedly coming. The equity is gone. But what are you and I to do with all of this? Well, as we talked about with Jonathan and Anna and others, it's time to start networking. Networking with local banks. Finding the operators who have the 5 to 40 units, because the pain is coming. We are in the 3rd or 4th inning, but it is coming. And I'm really happy to see that Ken and both Grant and other operators are trying to encourage us by calling. It's kind of like Amazon, right? Wouldn't we like to see Jeff Bezos and early Amazon and just see what happens? I think that's what Ken is doing for all of us is, hey, I'm going to call my shot. I'm going to live it out loud, and we're going to see what happens. So, Ken, I wish you nothing but luck. I agree with you. I think there was a lot of shenanigans, a lot of financial engineering, a lot of new operators who are going to lose buildings. You are lucky enough to be in a situation where you have a large property management arm with 20 years of experience. You're also going to get the ability to buy a lot newer stuff. So it's going to be fun to watch you buy $500 million in the next 12 months. But more importantly for us, let's figure out how we can take advantage of the next 12 to 24 months. Alrighty, folks, next thing to remind you about, if you are a part of our school community, you have the treat, the honor to have an opportunity to interact with Anna Kelly. In about, 45 minutes or so, we will be speaking with Anna Kelly. You can find the invite in our school community. You will be able to ask questions and participate. I know that I'm looking forward to that conversation. Hopefully you are as well. Also, by popular demand, we will be having Dan Bird as our next school participant. That will be Sunday at 10 a.m. Pacific. I will create that invite momentarily. Let's talk about some earnings. Yesterday, we got Palo Alto Networks after hours. They did beat top line and bottom line, but again, their guidance disappointed. Again, this is the second quarter in the row that Palo Alto Networks guidance disappointed. Remember why I look at Palo Alto Network. They are in cybersecurity. I sold software for the last 20 years of my career. And trust me when I tell you, cybersecurity is the last thing to get cut from budgets. So if Palo Alto Networks is slowing down, could it be a unique company thing? Absolutely. But could it be a sign that other software operators will have similar booking and forecast challenges? Perhaps. So again, pay attention to someone like Palo Alto. Lowe's. We got Home Depot's numbers last week. Lowe's numbers came in. They beat top line and bottom line, and they held guidance. Macy's missed on revenue, beat on earnings, and actually raised guidance. One of the things we're seeing at Macy's, Nordstrom's, and Kohl's is they are having a hard time attracting younger generations, right? Their average consumer's age is growing. And if you don't know anything about consumers, typically as you grow older, you spend less on clothes. So again, what we're going to likely see from Macy's, Kohl's, and others, Nordstrom's, is they're going to have to go after the younger demographic. We had another Fed president speak. Again, remember, we talked about over the weekend, we had 7 Fed speeches. We got another one this morning, Fed President Christopher Waller. Christopher Waller is basically saying higher for longer is here to stay. What did he say? He said, I want to have several months of good inflation before we lower rates. So again, from Christopher Waller, what are we hearing? A, rates are not going higher. They are here to stay. Now, we need to argue, we need to think about what does several months mean? Is several 2? Probably not. Is several 3? Maybe. Is several 4 or 5? So these are the things that we're going to start to parse. The good news is we will not have to wait long. At the next Fed meeting in June, we will get what is called the dot plot. Again, remember in the last reading, we got 3 rate cuts for 2024. I think it is fairly obvious we will not get 3 rate cuts. But what the Fed says at that June meeting in the dot plot will be very, very interesting. We got earnings from Norwegian Cruise Line. Norwegian Cruise Line actually upgraded their earnings actually for the second time this month. Norwegian Cruise Line says the fastest growing segment is millennials and Gen Z. This really has me thinking. We have a lot of doom posting out there. I'm wondering if we're just hearing from the loud minority. Maybe there's a bunch of trolls in their mom's basement who are upset at the world while everybody is out enjoying life, taking a cruise, working, doing other things. So maybe we just have a simple world where the loud minority is putting out nonsense, where the other folks are simply out enjoying life. I don't know if you saw this, folks. Buckle up. Crash Bros are wrong again. I don't know if you saw this news from Redfin. Redfin says that home prices are up 6.2%. They are now at a, get ready for it, all-time high. The past all-time high was $433,000. It is now a new record at $434,000. Yes, folks. Yes, $434,000. Let's talk about some other Fed presidents. We got Fed President Mester. Inflation risk is tilted to the upside, aka higher for longer. How about Bostic? Inflation to fall into 2025. It will take quite a while before central banks are certain inflation is on the path to 2%. So again, I want to go back to the second part of that sentence. Inflation doesn't have to be at 2% for the Fed to cut. That is what he means by quite a while before central bank is certain inflation is on the path to 2%. So again, it doesn't have to be 2%, just they have to have certainty it's on the path to 2%. The other thing is he's saying it's going to take a long time. Inflation is sticky. Inflation is going to fall into 2025. So might this be no rate cuts in 2024? It certainly could be. I still hold out that there likely will be one cut November or December. But again, we will know a lot more about what the Fed presidents think at the next Fed meeting, which I think is June 12th or June 13th. But we will know about that in a few short weeks. What else do we got? Oh, The Real Deal. The Real Deal had a very interesting article about multifamily, specifically multifamily San Francisco. Apparently, there's a gentleman, hopefully I pronounce this close, Nuevo Moser. He has been a San Francisco apartment owner for generations, his father before him. He said that prices in 2023 were, quote unquote, vulturistic. Not a lot of movement. 2024 will be the year of incredible disruptions. There are buildings in default. There was going to be ownership change, banks swapping horses on operators. Is going to be incredible disruptions. Again, what we are seeing now is really great pain equals great opportunity. Ken McElroy, again, as we open, has a plan to buy $500 million. He is telling us that the opportunity is in front of us. It is just, we just got to do the work, network. Ken's going to be playing up here. You and I could be playing down here. We do have a couple more things to hint at. PCE core is expected to come in about 2.75. We will get that reading, I believe, late next week. Jamie Dimon hints at retirement, and JP Morgan falls 4%. I thought that was interesting because, again, JP Morgan is often called the best banker in the industry. So the threat of him retiring was worth 4%. The reason I thought that was interesting is I always wondered what would happen at Berkshire Hathaway should the eventual happen to Warren Buffett, which is hopefully years and years away. But we all know it's coming. It's not a secret. Well, at least if you look at JP Morgan, it's worth 4%. So might Buffett be worth 5, 6, or 7%? Probably. But again, I thought that was interesting. What else? I think that's it. Yep, that's good for the day. Again, folks, remember, if you are a part of the school community, you're going to get the opportunity to speak with Anna Kelly in about, 15 minutes or so. We're also going to be scheduling a session with Dan Bird on Sunday. I'll put a link below in a little bit if you want to join. It is in the calendar link. Thank you very much. Take care. Have a wonderful day. Later.